Hello, and welcome everyone to the weekly Delphian meeting. Thanks for tuning in. So today we'll go through the market update you on earnings trades. We've got a few out there, and then go through Joe's analysis. So let's get started. Okay, overall, you can see NASDAQ into SPX 4, that changed last week during the meeting. That was new state 4. We talked about that. And Russell's an 8. So, pie wise, just a little higher. We talked a lot about the certain levels, and those all held. So, definitely oversold conditions at this point. So, here's the bullish bearish. So you can see we hit a peak right around almost 86. So now we're down to 80, right around 83. So I mean, all kind of things are pointing that we should get a nice little rally from these depressed levels of bullish stocks. So the only thing I on the charts, just looking at resistance, seeing if we butt into anything. But everything looks like the same call as last week, oversold greatly, and you know barring some kind of unforeseen events, this should continue to grind higher. Um, Unless we can't get past, I think the big one's S&P, so I'll show you that in a few. Nothing, we had that one big day with the new lows, 500, and pretty much nothing since then. Just came down real quick. Same thing with the moving averages, had to kind of peak, and now we're creeping back, kind of like the pie. This mirrors the pie pretty well. Anyway, state-wise, pull this up for the individual states. So, eights are off the charts here, 56. So we haven't been that high since back here. That's about a year ago, October. So about a year ago, we were that high. We got up in like right around 50 here, but obviously higher, 56. Ones are starting to, looks like they're trying to turn around. The fours are kind of, what we look at for the transition for the move to keep going. So if I just take out, you can see they pretty much, if we're going to do, sustained move, then the twos are all going to, like the fours will keep going up like this, while the twos are dropping. And, these fours eventually go to eights. So these two seem to be peaking right now, which is, this four definitely flat line. So this gives us, more indications that, we're near-term bottom. That bottom here was a near-term bottom. So that's it on the market pulse. SPX state 4. And we had talked, kind of going back and looking at the last couple state 4s. So this one here, we had that big pop up, and then immediately, it transitioned. I'll zoom in a little better here. So this is a transition, and then it had a big kind of pop up and then turned around. This one, same thing, just popped up, kind of leveled out there, and then kind of turned lower. So that's just, we have to be on the guard for that, pop and then turn around. So I think the key to that, it would be, this right here, this 50-day. I think this is critical, getting above, staying above this 50-day. And, I think if we do that, green light for the markets. if we have problems with that, it could get ugly. Everything's kind of pointing bullish. So, that's the one kind of uh, thorn I see out there that we have to be careful of, that 50-day for SPX right there. So get above that. And, I pulled up the chart. This is like the intraday chart here. You can see yesterday we got up 4383 and that failed. So that's that's right there at that level, 4381. So we were right above it, dip back below. So kind of all eyes on that, for the resistance, and that's up in the bands here too. You can see that stop loss matches that 50-day pretty much perfectly. So that's what I'd be really watching, this level. So we get above there, I think we're good. This could go back into one, possibly a three, but if this doesn't, if we can't get above that, then obviously we could have a pretty violent fall, down to that 4,200 level again, which held. So sorry, it's a little off. That'd be down to that entry price area. 42 is the bottom of our range, obviously 46 the top. So we're near the bottom of that, but that 42 held here, which is very promising. We figured that would hold. Um, I think the key is this right here. Stop loss, it matches the 50-day, just getting above there and holding. And I think we're all green lights after that. So that's my only near-term concern, but like almost everything's pointing bullish at this point. So except for that, that level. So get above there, clear sailing. But like I said, 42 held. I'll just draw those real quick. 42 held. That was also the 200-day. So that held very bullish. And here's our top, the 46. So kind of mid-range-ish, right now. But like I said, all eyes right here in the next day or two, trying to get above that. If it fails, obviously, we're watching 42. If it makes another run down, we're going to watch at 42. But near term, things are trying to push higher. It's a 50-day. That's the big one. So let's look at Russell. State 8 made a nice little dip down right to, guess where, 1700 area. Yeah. Excuse me. But within nine points of 1700, but that held. You can see I have a nice little smile here. So right now, just near term, getting above entry price. Downside 1700. Upside's obviously 19. So that's our range, 1719. So this is just like near term, seeing if it can get above entry price. Obviously, that'd be bullish also. So not as, so I'll pull out the charts here. And 17 down here and 19. So, we talked about this last week. We had our third break above 19, pretty much repeated everything, right? So went below, tested 19, failed, pretty much came down to 17. And then, from there, you can see back here, just kind of chopped for a while. let's look back at the previous one. So this one, actually broke 17, kind of up and down, chopped around, and then, came back up. So if it's going to repeat, expect a little chop and, another eventual run up to 1900. But, we just got to hold that 17. And, you see, we got the 50 cross below the 200 here. And that happened all back here too. Um, so, I mean, I think the big thing is, obviously these holding the levels, but, near term, I'm just kind of all eyes on this 50-day for SPX getting above there. So that's it for the market. We've had a nice pullback in oil. Treasuries, the 10-year had a nice drop. We were up above 4.8. You can see we got up to 4.887. So we're back down 4.6 area, which is a nice pullback. I think 4.5 is going to be the bounce level. If it does get below 4.5, I think it'll bounce above that. That's kind of, I think, a near term bottom, at least from what I've that's been kind of walking up, but I think 4.5's kind of that bottom level for treasuries right now. Let's look, Fed wise, not much changing. 21 days, 3 weeks. Pretty much nothing boiled in right now for November and December's, it's moved towards no hike. So expectations are, tempering on any more hikes at this point, until we see more data, but that's kind of where we're at. And then, they're continuing the runoff. So, obviously it's a headwind for the markets, but we're doing as they said. All right. Had a few. Speaking of treasuries, I know we've been talking. So this is the greatest treasury bear markets of all time. So we're actually living through that right now. Now this beat the 1860 bearish market in treasuries. So peak to trough is about 25% over 28 months. So we're in it. So thought that was an interesting chart. All right, this is another one. So this is what I saw. This is Commodity Trading Advisors. So this is like managed futures. So people give them money and they trade for them in the futures market. So this is their positioning equities as of current. So this is definitely bullish overall. If they're that negative, like right now. I think this was like a day or two ago, found this. So that's their positioning. Obviously, very bullish. When you're, minus 40, minus 50 in equities. So that's definitely something bullish to see people position that negatively. So no more sellers, unless, we get some kind of event. So, okay, I'll wrap it up for the market. Any questions, comments? Yeah, we got
Hey,
earnings
John,
starting to,
Josh, it's Lee.
yeah. Mhm.
Hey,
Yep.
I'm a little surprised oil is, well, last I saw it, it was edging down.
Mhm.
I thought it might go up with the difficulties over in the Middle East.
Yeah.
Do you have any thoughts about that?
Yeah, I mean, I don't think there's a big impact yet. If this does, spread, I mean, could be, you know, you already see a lot of countries kind of picking sides, right? I mean, if this spreads to like Iran, then yeah, you'll see a big spike in, one of those kind of countries, oil producing countries. like Russia, us, um, Saudi Arabia, those type of people getting involved, then obviously it's going to spike a lot, I would guess. But right now, I mean, it's kind of regional, uh, conflict, but there's a lot of rhetoric going around, a lot of people choosing sides. So, I mean, this could easily escalate into something big, easily.
Okay. All right. Thanks, Josh.
Hmm. Yeah, I was going to say earnings really start rolling out next week. With the banks, you got like Bank of America, on the 17th. So, you know, how earnings goes, that could be a, tailwind for the markets. If we start seeing good results, obviously that'll reflect in the market. So typically the earnings come in pretty good. So I don't know if Joe may have more to discuss on that, but that really starts rolling out next week. So any other questions, comments on the market? Okay, I'll go through real quick. It's the new user interface, our new platform. Getting close. Not going to give you a date, but it's coming. Um, so we got 6 open trades. One trade closed out on the bullish pre-runner. So Accenture, that's near hitting the mark for this, the bullish runner. That one's in good shape. Bullish pre-runners, they weren't doing so hot last week, but they've obviously turned around, most of them. So we got 3 up, 2 down. Um, these two are obviously lagging. Still quite a bit of time left before the earnings, the 25th. This one has a little over a week until you have to close that out. So still time. These other 3 are, doing pretty well. This is real close. That might have hit intraday. I don't know. I can't tell. And then we had one close out, Capital One Finance. So that one closed out with a nice profit. And
Prudential and Hilton hit yesterday, intraday. Yeah.
Well, that's the beauty of a live market. I only get one little snapshot here, so
Yeah.
that's good. All right, thanks for updating. Hopefully these other 2 can come back. I'm watching them. I haven't seen too much news-wise, but I keep them up on the screen here. That's obviously not having a good day there. So these, I think, what is? Did we look up what this one does? Sponge, I think. This agribusiness, that's right. And the seed oils and all that stuff. So yeah, this may be a loser. It's not looking good yet, but we still got time. This one's got a couple weeks. AXP's got a week. It's only about $4 or $5 off. So we'll see. So at least got one closed out, and as Sudhir said, he's had a few more closed out. So it's earnings really kicks off next week. So we'll see how those do. Any questions on that? All right, well, that's all I had. Joe, you there, Joe?
I am, Josh.
Okay.
Let me grab a screen here. Good job, everybody. Let's see. All right. Let's start with the new UI. Just a couple I wanted to point out. We got, oil rolling into day 2 last night, and then we've got the XLC and the sector overview rolling into state 1. So I want to pull up both those charts. Here's oil. Average, 10 days in state 2. We just rolled into it last night. Whether time will tell. Whether it'll be, we've already had a pretty good pullback. So maybe late to the game here with a reversal, but worth noting, rolled into bearish state last night. And then, on the bullish side, the communications XLC, basically Meta or Facebook is 24% of this index, Google's 23, and then the rest, are below 5%. So if we're talking about bottoms in the market and, potential leadership, this thing just rolled into state one. I would think Google and Facebook, Meta, are probably going to be leaders, in the next leg, would be my guess. So let's see, look at that. I mean, that's just crazy. Average bullish days in state one, 63. So that would be something else. Let's see how many times. Interesting, only in, state one 11 times. Well, I have not had a chance to go back and look into the guts of this, but
Yeah, it's it's a bit of a newer ETF, so it hadn't been around that long, like the other ones.
Okay, Josh, that's the answer to that then. But it really is driven by Meta and Google, so maybe a couple to keep an eye on here. I just wanted to pull up TLT just because it's so darn important to the markets. Obviously, we've been in state 8 forever. We've had a bit of a turn. We had, I guess, Fed Vice Chair Jefferson on Monday, maybe suggesting that they, are maybe considering pausing here at a minimum. I don't know that that's news, but there are more Fed governors out speaking end of this week, beginning of next. So again, if we're talking about a bottom of the market, and we did have some true volatility in this market over the last couple of weeks. Maybe this thing is finally about to turn. Would you say, Josh, the biggest bear market since the 1860s?
Yeah.
Up against that. So we're due for a turn. That would obviously be a tailwind for the markets as well. Just a couple more. I've been talking about XLK as leadership for a long time, potentially. So we've exceeded average days. We're coming up on twice as long as the averages things in state 2, which is just a couple weeks. I would guess if we've got market lows, this thing is going to turn pretty soon. So again, I think XLK is an important one to keep an eye on. That's not what I wanted, TLT. I want this to be SPX because I want to discuss a little bit about, I guess, that whole idea of the pie, Sudhir, that, you brought to light some time ago. So, where are we here? We're currently 17-1. All right. Last couple days, we've gotten, we're 15-7 on Monday. And then, it was the end of last week, 14-4-2, 14-1-5, and 14-9. So it was 3 days we're below 15%, because the day before that we're at 16 and change. So I went back and did a little look at the time we spend under 15%, and all I have to do is find it. Okay, this high-tech Word document here. Okay, since 2007, Delphian pi has been below 15%, total bullish, 180 days out of just over 4,200 days. So about 4.3% of the time, the bullish pi has been below 15%. Now, out of the 180, 55 of those days happened in 2008, which is not a shock, as we all know 2008. So I broke down each year, as you can see, how many trading days over the course of a year were below 15% in the pie. It's unusual, as you can see. Really unusual.
It's interesting.
So, you're talking about 3% of the trading days. If you take out that 55, 3% of the time, maybe we're below 15. Look at all the years, 07, none. 12, 13, none. 1 in 2014. We went over 3 years without that. 15, a little bit, let's see. In 15, it was the end of August to the beginning of September, one time. Interesting, we talk about September being the worst month for the market. It truly was then. We bottomed out at 12.3 in 2015, that 9-day period. 2016, early in the year, it was January, straight through from the 12th to the 29th, 13 days below 15. Actually, I didn't grab the low point there, 17 nothing. 18, now we think about 18, what happened? It's a damn good year, and then the third quarter came, and, we had the Fed scare. And so we had 2 periods between the 24th of October and the 31st of October where we were, below 15%. And then at the very end of the year, and I think the markets may have bottomed on the 24th that year, pretty sure. The pie, was still below 15, actually, until it rolled into 2019. You can see we got 3 days there. So from the 19th of December, 2018, into the 4th of January in 19, we were below 15%, bottomed out on January 2nd at 10%. So you get, kind of one period here. In all of 17, 18, 2019, in 18, 19, it was just really this 2 periods, October, where we had the Fed scare, and then the very end of the year, which turned out to be, a darn significant bottom. You then go all the way into 2020. We know what happened in 2020. What I found interesting in 2020, these 24 days were all around that market low. It's not like, we came back and did it again. So from the 9th of March to the 9th of April, straight shot, we're below 15%. We remember 2020. None in 2021. What's interesting and different about 2022, in my mind, okay, you got 24 days, but 3 different periods. And if we remember the charts, and, it was, I'm pretty sure it was the Russell, 2 of those 3 times bottoming at 1641 in the charts in May and June, if memory serves me. And so there were 3 periods in 2022, again, quite unusual. If you take the 17 years of the database, only 4 years, do we have more than one grouping of time of trading days where the pie is under 15%. Only 4 in 17 years. 2022 was one of them, and it was the only one of the 4 years where it happened 3 times. It happened in the May period, the June period, and then end of September, early October, which obviously ultimately was the bottom of the market, basically end of September, early October. And I'll tell you, what Ashok does with his magic here, it was the 30th of September where the pie bottomed at 8.0. Out of those 3, that was the low point. 8 is obviously very low in the pie, not as low as we got to in 2008, but historically low. And that's what, set 2022 apart, I think, is that, we had 3 bottoms below 15%. The whole point of this is that what we got in the last week is extremely rare. It's 3-4% of the time is the pie below. In 13 of the 17 years, we only got that look 1 time, below 15%. The last 2 trading days are, above 15%. So You know, Josh has been making a good case the last couple of weeks for the levels and a potential bottom. You see it in other areas. But I think that, you know, the pie below 15 is really significant and worth keeping an eye on. I would go back to 2008 once again. So I pointed out that, you know, the low in the pie happened to be, you know, damn near the day in 2022. You know, was researching 2008, and that's the one time we had 5 different times throughout the year where the pie was below 15. You had it in January, you had it in July, you had it October, November, and early December. So very, very unusual, but, you know, we remember what 2008 was all about. 2009, it was 9 days, one time, you know, just one period, 9 days from the 2nd to the 12th of March. And I didn't go back and check, but I'm pretty damn sure, you know, the bottom of the market that year was March 9th. And lo and behold, the low on the pie, you know, in that period was March 9th at 9.0. Now, either way, you know, the exact date obviously doesn't make a difference from an investing point of view, but I think it just speaks to the sensitivity of, you know, a shook's, you know, secret sauce reading the markets here. So, again, I just wanted to focus on this because I think it doesn't happen very often. 3-4% of the time, and more often than not, it only happens one time a year. So let me see.
Hey, Joe.
Yes, is that Sudhir?
Yeah. Hey,
Yeah.
I was looking at this as well, and if I can point to something interesting that occurred the last time, can you show the
Please.
S&P or the chart for September, October 2022?
Right here
Yeah.
with the S&P chart. Yeah, let me.
So
spread
when
this out.
you know, I track the green pie every day in an Excel file, and when I saw that it had bottomed and started to rise, I said, "Well, what happened the last time?" This, and as you pointed out, it bottomed around 8 on September 30th of 2022, and if you can blow that up, the interesting thing about that, which we should all be careful about, is that the market bottom was 2 weeks later,
October 13th.
October 13th. So,
Yes.
you know, the green pie bottomed on September 30th, and S&P started to go up, and then kind of had a capitulation drop, which was generally led by the big stocks, right? But all that time after the 30th, the breadth was increasing. The green pie was increasing, even to October 13th. But if you blow it up, you'll see see that bottom there on the third, that gap down at the beginning, then it went up. It's 2 weeks after the green pie bottom, which was September 30th.
Yes. Here,
Now it
you can
goes
see
up.
the screen, okay?
Yeah. So, you know, see how the market went up and there's kind of a capitulation drop there?
Yes.
And so just FYI, you know, we might be doing the same thing. If we had a bottom last Thursday, green pie is going up great. Breadth is in, that means breadth is increasing, but there could be some reason, like Josh was saying, we hit the 50-day. I don't know, Hezbollah goes and launches something in Israel. Iran, you know, mines the Straits of Hormuz. And there could be another, and what I'm saying is Thursday may not be the bottom.
Right. And you know, I don't think any of us should be in the business of picking tops and bottoms. You know, I think we use the Delphian tool, to increase our odds. And I think, I mean, that's my approach, just increasing odds, based on the information we have, and, just kind of taking it from there. But your point is well taken. And honestly, what I want to do and will do, Sudhir, is, I just didn't have a chance for today to speak about, where the market was, some period of time after those, below 15 percenters. But to your point, rather than looking out 3, 6, 12 months, because we probably know the answer, taking a look at the next 10 to 20 days, and, to see whether you get some kind of climatic sell-off.
Yeah,
So
exactly.
I'll include that.
That's something unique to the Delphian database that can be done. Like I said, I only went back one, because I have the older interface. It takes me longer. But I went back to that period and I found that very interesting that, the market bottom, I wonder if that's the same on others, where the market bottom is a little bit later than the green pie bottom.
Like I say, we'll do more homework, and from I think I got it there. Yeah, from a wave count, it's kind of interesting. We get the 1, 2, 3, 4, 5th leg, which was the October 13th. We got that 5th and final leg. It's the market count here to me is much more ABC rather than 5-wave down. Just kind of A, B, C. I don't, do we have a 1, 2, 3, 4, 5? Inside of the C, I would kind of suggest that we do 1, 2, 3, 4, 5. But time will tell, and that's.
Yeah. That's very
anyway,
interesting.
but thank you for the comments. Much appreciated. Anybody else? All right, if not, Josh, I guess.
Yeah. Thanks, Sean.
Back
That's
to
great.
you.
Great analysis. Very interesting. I appreciate putting that together. All right. Anyone else got anything before we wrap it up? All right. Well, thank you all. We'll see you next week.
Thank
Bye,
you.
everybody.